would interest me more. A lot of Asian EM have actually, the currencies have held up pretty well. But if you look around the world, some of the other larger emerging markets have had very large currency depreciations on the back, coming on the back of years of currency depreciation. Brazil is an obvious one that comes to mind. And I think historically, what we would expect in a recovery is that these countries are going to see a pretty rapid turnaround through the course of the next 2 years. So in addition to Asia, I think there's other areas that are very interesting. Turkey's probably the only example I can think of where the currencies come off hard where I'm not interested.
Right, okay. What about on a sectoral basis? Because tech stocks in China are off to the races as well today.
Yeah, I mean, we're kind of in a nifty 50 sort of environment. It's very obvious that tech has been the clear winner in what has happened through the course of 2020. But I think that the reflationary environment we're in is going to push interest rates up. I think tech will do okay, but I don't think it's going to be the clear winner that it has been for the last few years. I think you need to also be looking at cyclicals. I think you also need to be thinking about adding to financials eventually, as well as tech.
What do you dislike then in the current environment that we're about to find ourselves in?
Well, I don't like treasuries. I think treasuries, ultimately are going to face upward pressure on interest rates. The yield curve's going to steepen. So within a fixed income context, I much prefer emerging market, local currency debt or Asian credit. I'm not, that fussed with developed markets overall, if I'm honest, versus EM. I'm probably more bullish on EMs on a relative basis than I've ever been in the last 25 years. I think EM offers value and it offers growth. It's hard to fight,